Financial freedom equals passive income being greater than monthly expenses. That's the formula. If I put $1 in my 401k, if I put that on that formula, right, passive income, monthly expenses, that dollar is not creating passive income, nor is it reducing monthly expenses. It's not even going into the formula.
Welcome to the Infinite Wealth Podcast. I'm Cameron Christiansen, along with our co-host Anthony Faso. And today, guys, we are joined by JD Hill, co-founder, managing partner of LandX Holding. JD, welcome.
Hey, how are you guys?
We're excited to have you, JD.
Yeah, man.
Don't all talk at once.
We're excited, man. Long time coming. We've been hoping to get you on the show for a while now, and man, today's the day.
Yes, it is.
Let's kick this thing off. JD, I've once heard you say that you were given financial advice while broke. What was the moment you realized the traditional path was not working?
Well, when it wasn't working in my life, right? That's when I realized that it didn't work at all. My background, I graduated college with a degree in business and jumped right into the financial services industry as a 21-year-old kid that had a background in beer drinking, not a background in finance, right? Like probably most college kids out there. And I'm a perfectionist, right? Like you can't overtrain me. Like I want to know everything I can about whatever it is that I'm going to be offering or promoting to people. And when I got into financial services, um, I thought it was the greatest thing ever. I was like, I'm going to be an entrepreneur. I'm going to be able to make as much money as I can. Like nobody's going to be able to put a limit on that. It's rewarded for effort. And that was one thing that like I knew I could go and control was my effort. And what I found was after 2.5 years of like toiling was like my effort was not producing the results that I wanted, unfortunately. And so it took a long time for me to get to that place, but it didn't work, and I was in that space for 7.5, 8 years in the traditional financial world. Before I finally had enough, I was like, I got to get out of here. This isn't working.
So you were 21 years old. I'm assuming you were broke.
Yeah.
But you were giving people financial advice.
Yeah. Yeah. So,
Okay.
so let me, to put some additional color around that, how broke I was. We were on Medicare for health insurance, or is it Medicaid? No, it's Medicare. Medicaid. Yeah, it was Medicaid. We were not old. We were young and broke, not old. And on elderly health insurance, we were on Medicaid. So that's how broke we were, is that we qualified for government assisted health insurance, and yet I was going out and giving people financial advice. So the level of conviction that I had for what I was doing is obviously really, really high, even though it clearly was not materializing for me.
Most people we talk to feel stuck. They'll tell us things like, I feel behind. I wish I had more time with my family, or work is draining me. Does that sound familiar? The truth is, it's not that you don't want freedom. You just don't have a clear system to get you there. And without a system, what happens is 3 years from now, you're very likely to be in the same place that you are today. Your kids are going to be older and they won't care that your business was more successful. They'll just remember that you weren't there.
That's why we built the Passive Income Operating System. It's the exact framework we use to design financial freedom for ourselves and for our clients, not decades from now, but today. Now, the system isn't free, but the training that shows you how it works is, and it's less than an hour. So go to infinitewealthconsultants.com/PIOS, PIOS, and take the first step of buying back your time, creating passive income, and designing the life you don't have to retire from. Well, it wasn't materializing, but like you said, the company you were at is very well known for their training, and I'm assuming that you absorbed it. How come that didn't translate to results?
So I think the reason why I didn't translate into results was because everything was a nail. Meaning, like, it didn't matter what somebody's financial situation looked like; they were all nails. And so all I was equipped with was a hammer. And so I'm going out treating everyone like a nail, but not everything was a nail. And so there were so many aspects of finance that I just didn't understand. What I was trained how to do was how to sell product, like not actually how to solve problems. So then when I would apply that in my own life, I'm buying product, but I'm not solving problems. And so my problems weren't getting better, but I had a whole bunch of product, right? I had lots of products, but I didn't have any resolution to the problems that I needed to solve in my life. I wasn't moving the ball closer to, the goals that I'd set for myself and my now wife. So I think that's kind of where the breakdown was, is that it was, you were taught how to sell products, not taught how to solve problems.
JD, you mentioned a minute ago you're a perfectionist, and I can imagine that disconnect probably did not feel good. All right, is
Yeah.
trying to do something not succeeding. So my question for you would be kind of an emotional, like what did that do to maybe your confidence and then even your identity at that age?
And it was really tough. Like I vividly remember, we lived, my wife now, she was my girlfriend at the time. We lived in a one-bedroom apartment. I remember the address vividly, right, in Texas. We live here
Yeah.
in Fort Worth, and I wore the same suit for like 24 months. Right? I got my shirts from Kohl's because they had matching shirt and tie combos. Anytime one of our managers would say, "Hey, who wants to go to lunch?" I was the first to throw my hand up because I couldn't afford to eat. I mean, there were days, 2 or 3 days in a row where, like, we wouldn't eat, right? Because we couldn't afford it. Um, and I remember in our one-bedroom apartment, walking in from the kitchen into the living room, which is basically the same room, and crying, like, just being in tears of fear of having to go to work the next day because I didn't know how I was gonna make this thing work. Like, because what I was doing wasn't working, but I was the first one in the office every day. I was the last one to leave. So the reason why I wasn't getting results had nothing to do with lack of effort. There was a clear disconnect with what I was doing with why I wasn't getting results, but I couldn't for the life of me figure it out. And so it was unbelievably frustrating. But I just had this insatiable belief that I was gonna be able to make it work. Cause it was either make it work or die. Like those were my only 2 options that I gave myself. And so I'm reading self-help books, right? Zig Ziglar, I'm reading Think and Grow Rich, like all of these things, trying to manifest things into existence, right? And it was, man, it was a really, really, really tough time, for a couple of years in the beginning part of that business.
No, JD, we've actually known each other for many years, so we know your backstory. And one of the things I thought was very interesting is even though you were broke, you actually hired a coach.
Yeah.
Can you kind of go through that thought process? Like, because a lot of times people they want that education, but even when they have the money, they don't want to pay for it. How were you able to justify and see that through?
Yeah. So I was very fortunate. My wife, her name is Amber. She had unbelievable belief in me for whatever reason. She saw something in me, and she wouldn't let me quit either. And so because of my commitment to like trying to figure this thing out, I went to my managing partner at the time, and he couldn't figure out. He was trying to train me. Whatever he was training me on wasn't clearly working. And so there was a guy in Florida, very good friend of mine now, and he was in the same company, but he was in a different office. He was like number 2 in the company in policy sold, number 1 in the company in new clients. Like he was absolutely killing it, and he was like a year and a half to 2 years ahead of where I was in my journey. I met him at a regional meeting. His name's Evan, and he this company is really big on promoting status, and the way they do that at these regional meetings is with ribbons. So the bigger the ribbons, the more money that other people is like, okay, that guy's got all the ribbons, like go talk to the guy with the ribbons. Like everybody wants these ribbons, right? Like I can't eat ribbons, but we chase these ribbons like crazy. And this guy's ribbons were dragging the floor, and I remember the first time I went up to him and I shook his hand and I introduced myself. And I just stared at him like he was a bug. Like I was just in awe at like his confidence. I was in awe at just his success that he had. And he wasn't that much older than me. And I'm like, if this goober can do it, I can do it. And so I ended up getting his number. I reach out to him. I'm like, hey, I'm trying everything I can to figure this out, and it's clearly not working. Will you coach me? And he's like, I would love to, but I'm not going to do it for free. Because he said something that was really telling. He said, those who pay attention. And I was like, done. How much is it going to cost? And he said $150. And so I went to my managing partner and I said, "Hey, can I borrow $150?" I didn't have 150 bucks. And he's like, "Yes, absolutely. I'll loan you 150 bucks." And so, but I like, it wasn't a lot of money, but it was a lot of money from the standpoint, like I didn't have any. So like any
Yeah.
type of loan, like I needed it. Right. And so
Yeah.
not can I borrow 150 bucks to buy food. It was, can I borrow 150 bucks to invest in myself? And so I hired this coach, and the next 12 months radically changed my business. I went from being dead last in this agency, in this office, like worst production, probably arguably the most embarrassing agent in the agency, right? To ascending to one of the top in my peer group in the entire country,
Wow.
to being, top 10 in our agency, to then being in management, and now I'm coaching other agents and advisors. So it became kind of a really cool, you know, call it success story, I guess you can say. And I ended up working with him for about 18 or so months, and he just completely changed everything about me. Because what I was doing was good, but because I'm such a perfectionist, I was also getting lost in the weeds. And so he was teaching me how to have conversations with people to help them actually solve problems instead of trying to sell a product. Because he got it. Like he understood what the real name of the game was for people. And I didn't know how to bridge that gap. And so he really helped me bridge that gap to get out of my own way and stop overcomplicating things.
JD, I got a question, right? Is a lot of times when people get stuck, there's a lot of kind of negative headspace that we get
Yep.
into and tough to get out of, right? So if somebody's listening, they're feeling stuck, do you have a recommendation on like what's the first mindset shift that they would need to make before any sort of strategy?
Yeah, I think the first thing is being honest with yourself, right? Like I, and when I say be honest with yourself, I don't mean beat yourself up and say you stink. I mean just be honest with like the whole landscape of what you're working on. Meaning if something is not working, figure out like why is it not working? Like where is it breaking down? What am I doing wrong that I could improve and get and do better? The other thing too is that you can't go to your peer group of friends that aren't doing what you're doing and ask them what's wrong because they don't know. Their perspective is going to be coming from a different vantage point. You have to go to someone else who's doing it or has done it and get their perspective. And that was the thing that I did. So like my friends from college, I'm struggling and they're like, you need to quit. Like that was their advice to me. It was like, quit. And I'm like, I'm not quitting. I was wanting to be encouraged. They didn't encourage me. What they encouraged
Hmm.
me to do was to leave and abandon all the work that I'd been putting in for the last 2 years before things actually changed. And I'm so grateful that I didn't listen to the naysayers. But I just have a tendency personally that if there's something that I want to accomplish, I want to find one person or a group of people that are doing it and doing it well. And then I want to go be a fly on the wall and glean as much as I can from those people. And so I think that's kind of the biggest thing is one, be honest with yourself. And then two, find other people that are doing what you want and get involved with those people.
JD, that's great advice. I know we're talking about your journey, which I, but as more on the financial services side, but this can relate to whatever journey you are on. And I appreciate your story. And honestly, it actually hit home. It reminded me of a similar story, but I just didn't charge Cameron for that coaching. So I wish we would have. I would have. I wish I would have heard that story sooner. But JD, if we fast forward a little bit, you ended up becoming successful, like you talked about. You went from the bottom to the top, and I know you had to have these all these security license, which takes a lot of time and effort to get. But then you ended up walking away from all those licenses and that income model that you had built so far. What happened to make you make such a drastic change?
Yeah, that's a great question. So the whole point of being a traditional financial advisor is to get to a place to where now you're collecting what's called AUM, assets under management, right? Where people are now taking their dollars, investing it with you, you're putting it somewhere in the market, and then you're collecting a fee to basically babysit those dollars. And so what happened with me is I was in this study group, and you jokers were actually in it. It's how we met, and it's with a bunch of other people like y'all that are trying to figure out how do we take our business online. I was the only guy, I think, in that group that was part of the traditional financial model. Everyone else was doing this infinite banking real estate thing. So it was like completely opposite of what I was talking to people about. But the freedom that y'all had, the way y'all talked, the excitement that y'all had, the success stories that you had, I was like, I don't have any of that. Right. Like I meet with my clients once a year. We do annual reviews. I tell them you're getting 8%, right? We high five. I ask if you have any more money to save, and we kind of move on down the road. And all the while, I'm getting paid and I'm taking no risk, right? Like it's none of my capital that's invested in the market. So I have no risk, but I'm getting paid today to manage these assets. And anytime a client comes to me and says, hey, I need money for this, I said, well, no, remember, this is for the long term, right? I have to refocus them on why we set the whole thing up to begin with. And I got to that place for myself personally where it's like, I don't have any assets. Like I don't have a lot to show for, even though I'm taking all the advice that I'm giving to my clients. And I got really frustrated when I'm listening to you guys talk about all the success and all these great things that y'all are doing with your clients. And I was like, I want to do that. And there was this aha moment for me that I went back to my business partner. We had opened up our own firm and I said, we need to pivot. Like we were on this side of the pendulum. We need to swing all the way over here. We need to pivot because these guys are having unbelievable success with the people that they're helping steward their money. And they have amazing client success stories. Like I want to be able to help people do the same thing. And he was like, I'm going to continue doing this model. Like I like kind of being lazy and not really doing much and getting paid for it. And so, and that's putting it kind of harshly, maybe there's a bit of hyperbole there, but like the sentiment is still there. And so we ended up kind of having a breakup where I left and surrendered all of my licenses. I gave up all my AUM. I said, you can have my book of business. I don't even want to get paid for it. I want out. And then I left and went completely to the other side of the world, which is kind of this alternative investment space in doing infinite banking. And in the last, I don't know, 6 or 7 years, the results and the success that I've had personally, in addition to the people that I've been able to help, has been far greater than the years that I spent doing it the traditional way.
JD, now that we've got you, we've heard your backstory. You've been on both sides of the aisle. What would you say the difference is between the advice about products versus coaching a system? How would you describe the difference there?
The difference would be, I think, a couple of things. Number one, everyone has a bent. So, like when I was a traditional financial advisor, we had mutual fund companies that would come and talk to us about why we should sell their mutual funds. Right. And it's always, look at our track record, but our track record can't be used to predict the future. But look at our track record and how great it is, but don't plan on that for the future. Right. And everybody had their own spin on how they manage, portfolio theories and all these types of things. But again, all of it was, again, everything's a nail. It's always chasing return. And then it becomes a race to zero, meaning you start to engage with clients that are like, well, how much are you going to charge me for this? Right. Well, this guy down the street's going to charge me this percent. Will you charge me this percent? And now you're competing not on value, but you're competing on how much you're going to charge the person. Because the reality is that there's not a lot of value that a financial advisor can really offer outside of the portfolio that they can put together for you. Like beyond that, there's no, like, in other words, even Warren Buffett says, if you're going to, buy something, a mutual fund, buy the index, buy the S&P and just let it ride. And you can get a no load index fund tied to the S&P for next to nothing. Like, what do you need a financial advisor for? Right. But again, that's not solving problem. It's selling products. And so coming back to managing a system, once I realized that like all the things that I wanted to accomplish in life, I didn't have to wait until I was 60 or 70. I could get it now. I just had to relook at how to get there and the system and process in order to do that. That became so simple at that point. Or rather it's easy, but not simple, right? There's certainly some work involved, but it became stop abdicating or stop giving your resources away to a financial advisor to manage for you because they don't care as much as you do about your money. They don't care as much as you do about your success because it's yours. You're emotionally invested into your own financial future. They're kind of invested, but I mean, they've got hundreds of clients, maybe even thousands of clients. right? And so the system becomes so much simpler because now you're looking at opportunities based on, is this getting me closer today to my financial goal, or is it getting me further away to my financial goal?
What I'm hearing you talk about is kind of stewardship, and the word used was abdicating. And for Anthony, that means like to relinquish. But what does
That's right.
taking back stewardship practically look like for like a family? What does that look like?
Yeah. So I got this from, the group that I'm a part of, Wealth Without Wall Street, and you guys preach this all the time as well. But this was the easiest framework for me to get my arms around. Financial freedom equals passive income being greater than monthly expenses. That's the formula. Okay. And I love math. I love math because it's a universal language. It's true no matter where you are in the world. Math is math. And so I can actually put that on an Excel spreadsheet and I can work that formula. Financial freedom equals passive income being greater than monthly expenses. So now that I have the formula, every dollar that comes into my personal economy is either A, creating passive income, or B, it's reducing monthly expenses. So the formula then dictates to me where I need to put those dollars. Like that is so simple for me. So for example, if I have $100,000 that comes into my personal economy, right? I can either A, create passive income with it, or B, I can reduce monthly expenses with it. The traditional model is so focused on reducing monthly expenses that even it's a race to zero, right? Where I could be totally debt free, but I have no money. I have no freedom,
Yeah.
right? I have no cash. Or I could have $10,000 a month of monthly expenses, but I could have $5,000 a month of passive income and I'm 50% to financial freedom, right? And I think it's a mindset shift that once you can make that shift, it makes it really, really easy, or simple at least, to start making financial decisions. Right. So for example, if I put a dollar in my 401k, which I don't have a 401k, I sold all of my, like I'm out. I paid the fees, paid the penalties, like I'm out, right? I don't like my money being in prison. But like if I put a dollar in my 401k, if I put that on that formula, right? Passive income, monthly expenses, that dollar is not creating passive income, nor is it reducing monthly expenses. It's not even going into the formula, right? It's
Yeah.
going somewhere else entirely. So it doesn't get me any closer to financial freedom. It actually gets me further away to financial freedom. Does that make sense?
Yeah.
Absolutely.
Uh, JD, could you maybe briefly explain like infinite banking and what problem this solves compared to Wall Street?
Yeah. So you guys touch on this so much. Y'all are such amazing experts in this space. From my perspective, infinite banking is a cash flow management system. Right. That in its simplest, it's a cash flow management system. It's where I put the money before I go and invest it. Right. It's not the investment. It's none of those things. It is simply the warehouse of where I'm storing my cash before I go and invest it. And so going back to the $100,000 example, if I have $100,000 and I first put it into my infinite banking system, my cash flow management system, now I'm in control of that. I have full use, full control. I don't have to ask permission, from my financial advisor if I can use it, right? I have control. Now I can take opportunities that present themselves to me to figure out where do I want to deploy this $100,000 to start creating passive income or to pay off debt, right? Because I can do either or. But if I take it and put it somewhere else where I don't have control, where I don't have use of it, it's locked. Right? No different than if I apply it towards paying off my house. That 100,000's gone, right? It's now an equity that I can't touch necessarily. You know what I'm saying? And so infinite banking becomes the place where all of this capital comes into your financial world that now you're setting yourself up to go and deploy it to create financial freedom.
JD, looking back at your story, I was curious on where you think if you'd stayed the old course, where would you be financially?
Mm.
That's a good question. It's really hard to say. I'd have obviously, probably a decent amount of assets under management. I'd have probably a pretty good lifestyle. Um, but I wouldn't be actively investing passively or investing actively into alternative investments. And I started flipping houses, just before me and my business partner, we parted ways and I went the this route. And that was really the catalyst for me when I realized after flipping this house, and making some money, I was like, this is actually the way to go. Like, why am I not doing more of this? Like, this actually makes sense. And then it became, how do I do more of this? How can I get more people involved to want to do it with me? So I started raising capital, and that kind of thing, and started syndicating deals. And now over the past 6 or 7 years, we've purchased probably 3 or 400 million dollars in real estate. And if I were still doing the traditional model, I probably would have purchased my primary residence and that's it, right? Like, we wouldn't have been able to do the things that we've been able to do. We've paid investors, several $1 million in proceeds back. Like, so the impact that I've had from that perspective has also been far greater than the impact I ever would have had on managing assets, right? So I think it's twofold. One, I've personally had tremendous amount of success, but the success that I've had for the people that have come along on the journey with me, their results have been far greater, than the results that they would have had just getting, 8 to 9%,
Yeah.
returns, in the market.
Now, JD, I'd like to maybe ask that question a little different. Let's compare where you're at now
Mhm.
to where you think you would be if you would have followed your own advice during of doing the traditional financial planning as a client. Where would you be there compared to where you're at now?
Okay, so today I
And
have,
I don't want you to be humble,
yeah.
which isn't hard for you, but I mean on the
No.
podcast, I mean,
Um, so today we're over 200% of passive income to monthly expenses, and we've been able to do that pretty aggressively over the past probably 3 or so years that we've been able to do that. We have, over 8 figures in financial net worth, because of all of this as well. We take, I don't know, 6 to 8 trips a year as a family. In fact, we're leaving next week to go to Universal and Disney for 2 weeks. um, like, my life would look totally different. I would have a bunch of money, probably multiple six figures, nothing like I have today, but I'd probably have multiple six figures sitting in a brokerage account in 401ks and IRAs. And I would just be drumming along every year, every month, putting money aside, saving it just like everyone else, hoping that I can get 15% this year, hoping, right, that I can get 15%. And so, like, I wouldn't have the life that I have today. My wife stays at home, we homeschool our kids. Like, we live a really, really good life. And does that mean that people that take the traditional financial model can't live that life? No, of course not, right? This isn't an absolute. This isn't to say that the traditional model doesn't work for anyone, but rather, if you do something long enough, it'll work for sure. But there are certainly other paths out there that can help you actually get to where you want to go faster and with less risk. And I think that's the thing that most people, Simon Sinek did a talk on this, and he talked about the herd mentality. And he said that people, human nature, we will stay in the herd because it feels safe. We may logically be able to know that the decisions that the herd is making isn't actually in our best interest, but we will stay in the herd solely because it feels safe to do what the herd is doing. And so you could be that person that's going to your coworkers or your colleagues and saying, I kind of want to do this alternative investment thing, where I don't want to put money in my 401k, or I want to do this infinite banking thing. And everybody else is going to say, well, don't do that. That's wild. Don't do that. Well, that's the herd mentality trying to keep you stuck. And it's not nefarious. They're not intentionally trying to keep you stuck, right? But it's just what they know, right? And if you want something different, you have to be willing to do something different.
Great point. As people, as I'm thinking about that, as people kind of step out of that herd mentality and start looking at doing something different, they're typically presented with two options, right? Active opportunities or passive opportunities. I know you're coaching people on both of those. So, from your perspective, how does a listener know kind of which lane is best for their current situation?
That's a good question. It's gonna be it's certainly gonna be dependent on the person, but I'll give kind of a broad overview of that. So the from an alternative investing standpoint, right? If you're gonna actively invest in something, you need to first realize or figure out what are things you're naturally good at, versus things that you're not good at. What are things that you're drawn to versus things that you're not drawn to? So there's a tool that we use called the Investor DNA. And this helps you figure that out. Like, what type of investor are you? So, for example, I got into short term rentals because I'm a spreadsheet guy. I saw the numbers on a short term rental and I'm like, boom, I'm into that. And then I got into short term rentals and I realized very quickly, I am not that good at hospitality, right? Like answering questions about where to park and how to do this and how to do that. This is not my space, but I like the return, right? Like I like the number on the spreadsheet. So I got out of short term rentals because, I learned through experience that wasn't my space. So the first thing is getting clarity on what type of investor you are. The next thing is recognizing that it's going to take time, right? It's new learning. And this isn't meant to discourage anyone. Just acknowledge the reality of something new that you're an endeavor you're going to take on is going to be new learning, but you have to commit to it through the end, right? You can't go down the road halfway through and then be like, I'm not getting results. Well, of course not, because you're only halfway through. You got to keep going. But with active investing comes higher returns naturally because you're actively involved in it. Passive investing, on the other hand, requires very little new learning, and you're passively involved and your returns are lower, but it's in exchange for that time, right? So if I'm actively involved, I have more time into it, so I should get more return. Versus if I'm passively involved, I don't have time involved in it. That time is being spent by someone else. So they're going to get more of the return, and you're going to get a part of the return as well for being involved in the deal. And so a lot of people I would recommend, not everyone, but a lot of people start passively investing in a space
Mhm.
and figure out and learn that space through passive investing. And then if you realize like, man, I really like this, then you can start trying to get into the active side to see if you can do it yourself. But on the passive side, it's where you're going to meet people. It's how you're going to build relationships, right? It's not necessarily a heavy lift from a time standpoint. So if you've got kids, if you're married, if you got a full-time job, right, all those types of things are going to have to play a role in how you would figure out, do I want to be active or do I want to be passive?
JD, what's a common mistake you've seen people make when they start going down this alternative path?
Wanting to do everything, right?
Mm.
Because what I mean, seriously, right? Wanted to do multifamily, wanted to do short-term rentals, wanted to do commercial, wanted to do storage. Like there's so many options out there that I think people oftentimes get in a hurry. And we don't need to be in a hurry, right? Slow down, take your time, and commit to one thing and see that one thing through. And then if that one doesn't work, then you can start a new one. But like you're never gonna know unless you fully commit to seeing it all the way through. But I think that's the biggest thing is don't get lost in shiny object syndrome. I mean, there, y'all know that how many different opportunities do you guys get presented to you doing the podcast? Like,
I tell you, that's one of the beauty of this podcast is getting to hear these opportunities. And you know what? We went down that road because we did a thing on ATMs. Like, so we bought 3 ATM machines and short term rentals. We bought coaching on short term rentals. Then we did some land flipping. And then we're like, oh man, we're not getting anywhere. We're chasing these shiny coins. And we had to specialize.
that's right. Yeah. So that would be my recommendation is get clear on one and
Yeah.
get good at that one.
JD, what I heard there was kind of that difference between active versus passive. Active might be more skill set based. What's your preference? What's your passion, right? But on the passive income side, right, it's maybe about due diligence, right? Is kind of digging into some of the opportunities and then maybe putting some capital into it. So, what's maybe a question or two, or maybe even a mistake that people make as they go down that passive income side? So, a question around due diligence. So, what's a question they could ask an operator to avoid maybe some red flags or identify some red flags?
One would be, are you actively involved in this deal as well? Right? Like, do you have some skin in the game? That's obviously important. Two is, are you just the capital raiser or are you the operator? Right? Because that's important to know. If they're just a capital raiser, there's nothing wrong with that. But you'd want to know how close are they to the operator. And by when I say operator, that means the person that's actually managing the business model that just got presented to you. Okay. So when you're sitting across from someone that's presenting you a deal, whether it's in multifamily or land or whatever, the pro forma, mind you, I've never seen a bad pro forma. I'm sure y'all haven't either. Every pro forma looks really, really good,
They're great.
right?
Yeah.
They're all really good. But it's is this your pro forma? Are you operating the business plan here, or are you just a capital raiser for the operator? So wanting to know those two things. If they're just a capital raise, that's okay. But just how close are you then to the operator? Right. Wanted to know those types of details as well. The other thing is, what's the exit strategy if things go bad, right? And what could go bad? We're dealing with a situation right now where interest rates are not where people want them. I think there's still kind of some false hope that we're going to get down to 2 or 3% interest rates like we were before. I don't know if we'll ever see those again in our lifetime, for a number of reasons. But so today in the real estate market, you're seeing it's more of a buyer's market than it is a seller's market, right? The other thing is wanting to understand, if there's debt on these properties, what type of debt is it, right? Is it interest only? Is the interest rate fixed? And the cool thing about investing passively is you start to really understand how to ask these questions, because that's going to help you then if you do become active on the other side. You're going to now be able to understand how to underwrite these deals because you did such a good job underwriting it when you invested passively in them.
Now, JD, what is a myth about infinite banking that you would love to see go away?
That it's a magic bullet. I'd love to see, right? That it's get
Yeah.
rich quick. It's not a magic bullet. It's not get rich quick. The other thing I'd also love to see go away is how people present it, um, as an investment alternative, because it's not. It's literally meant to replace cash. I think that's the biggest thing that I deal with, on a continual basis with folks is, people thinking, well, I can do better somewhere else. Well, compared to what, right? Compared to your checking account or compared to equities? Because we're not talking about the same thing if you're comparing it to an investment, right? I think people need to understand where this fits and where it doesn't fit. And this is not the investment. It's the storage tank of where you store your cash before you go and invest.
In regards to kind of your family scenario, I heard you mention 200% of passive income over your monthly expenses. What's one KPI that a family can start tracking just monthly to start getting them closer to that goal?
Yeah. So, one of the things that I like to do with people, and I got this from a good friend of mine, Sharon Srivatsa. He he's really good at taking complex things and making them simple. And so what I'll do is I'll draw, what kind of looks like a Coke can, right, or a rectangle with the lid open at the top, and I'll draw four even lines through it, and say, Cam, your passive income goal is $10,000 a month. That's your passive income goal. So I'll break this up into 25% chunks. And at the very bottom is 25% or $2,500. And so the first goal then is getting to 2,500 a month. Because I think what most people get caught up in is if my goal is 10,000 a month, that's a big, big nut to crack, right? That's a big pill to swallow. And I think people often then get discouraged. Like, how am I ever going to do that? Right. But if you can look at it in chunks and get to the first 25% or the first 10% and then build on top of that, it's just a stacking game and it starts to compound. It actually happens a lot faster than you think. And so I think if you're working on this with your family, is break things up into small bite-sized chunks and run really hard towards the first marker. And then once you get it, run really hard towards the next. Don't try to do it all at once, right? Because that's a quick recipe to lose a lot of money, like a lot of money, versus breaking it down into small bite-sized chunks.
JD, for someone who's hearing your journey and is interested, what's one action they can take, say, in the next week to kind of help them on their journey?
Clarity. You have to get clarity on what you really want, and get buy-in, right? Get buy-in from your wife, get buy-in from your husband, get buy-in. So get clarity on what you want, get buy-in, and then find a community of people that are wanting the same future. Now, I was very clear on that. Not the same thing, meaning, the same number or the same multifamily, direction, but the same future, the same people that want the same financial freedom future. Because if you find a group of people that want the same thing, everyone's going to be in different places. And you're going to be able to glean from all these different people and different perspectives. And it's going to help, at least it has for me. I pay a lot of money every year to be in masterminds because I want to be able to glean from people that are smarter than me and way ahead of me, right? And it has helped bridge the gap for me to be able to achieve the things that I've been able to achieve in a faster time frame. So get clarity, get buy-in, and then find a community or a mastermind of people that can help you along that journey, because there's going to be tough days, right? There's going to be days when things don't go well, right? There's going to be days when, you may lose a little bit of money. Like that's just part of the process, right? But don't get discouraged. You just keep moving forward, right? Because this is what I tell my kids all the time. I've got 3 boys. They all do jujitsu. I've started doing jujitsu now, but one of the things that I've told them is that you can't fail unless you quit, right? Everything else is just learning. You may lose in a jujitsu competition, but you didn't fail. You just learned something. What did we learn? Right? How did that person beat you? What did they do along their journey whenever you were rolling with them? How can we then apply that going forward into the next match? Right. And so I think oftentimes so many people will quit when it gets hard and they're like, I can't do this. Well, you can do it. You just have to keep going. Right. Keep learning and keep going.
Well said, JD. Yep.
Yeah, I just
Faso?
want to get one more question from
Yeah.
JD. Do you have an example that you may, because you work with a lot of clients on how they incorporated the passive income operating system and then how that had changed their lives going forward?
Yeah, so I'll give you a most recent example. So I have and real quick, everybody's situation is different, so don't get lost in these numbers or anything like that. So I've got a business owner client. He's in his 60s. He's getting ready to sell a business, and he had multiple 7 figures sitting inside of an old 401k. And he knew before he even got to me, he knew that the more he put into that, he was compounding a future problem, which is this tax problem. And so I worked with him on getting money out of that 401k over a series of years. We helped mitigate the tax exposure on it through some tax planning that we did. And then we were able to move money out of the 401k this year into his IBC system, and then take those dollars and start investing it to create passive income. And so he knew he wanted to do self storage, and he also knew that he wanted to do some passive investing. And so we immediately, once we took those dollars out and put it into IBC, we immediately took money and started instantly creating cash flow. And then we also took some of those dollars and started instantly putting into some passive self-storage deals as well, while he's learning how to do his own self-storage. So his money's already at work. He's already generating cash flow today. He got some of it out of his 401k. He was able to erase all the tax that would have been paid because of the tax planning that we did. And then next year we'll do the same thing. And the next year we'll do the same thing. And we'll keep doing this. And the goal that I built out for him, which I showed him, was how to get to $300,000 a year passive income over the course of us pulling all this money out, because that's what's going to help him retire. So he's going to have over $300,000 a year of passive cash flow. He's going to run all that through his passive income operating system within his IBC system. He's getting all the money out of his 401k. He's avoiding all the tax exposure on that, which, Anthony, I'm sure you can appreciate as a CPA, right? And so that's one quick example of how I was able to help a business owner use the passive income operating system with money that's sitting in prison to start pulling money out to start immediately creating cash flow today.
Love it. And I got him at, we don't give enough justice. Do you remember how much death benefit he's going to leave in his family? It's got to be multi-millions.
It's going to be upwards of 20 to 30 million. It's going to be
Wow. I
significant.
mean, well, awesome, JD. Thanks for sharing.
Yeah, you bet.
JD, thanks for sharing everything, man. What a great story, right? From how you were, I think the phrase you used early on was tears of fear of having to go to work, right?
Right.
To ending to kind of this story of, man, I bet that guy's probably got tears of joy for kind of feeling the relief, one, getting rid of the tax burden, and also helping him create kind of the income that you're able to help him create. JD, really appreciate you coming on the show, sharing your story and the insights that you did to our listeners. Appreciate you, man.
Yeah, you bet. You bet. And because I know you guys obviously get lots of folks on here, talking about different ways to create cash flow and passive income and those types of things. We do have an opportunity for accredited investors that are open and interested if they want to start investing passively in our debt funds. And so one of the things that we also do, that we still do, is we buy lands and then we turn around and we sell it on owner finance terms. And so we'll buy like 300 acres, we'll subdivide it into 1 acre lots and then sell that on owner finance terms and generate a note on that. And so we have investors that will invest in our debt funds, and we pay 10 to 12% quarterly interest to those investors so they can instantly start creating cash flow today. That's all backed by real estate.
Just another example. It's not that difficult to create passive income. You just need to know where to look. And of course, you need to do your own due diligence. So, JD, if somebody is interested in that, what's the best way to learn more?
Yeah, so they can go to landx.lands, or they can certainly shoot me an email at jd@landx.lands. And I'd be happy to hop on a call and walk through our current deals that we have right now. Like I said, we just put 300 acres under contract, and we own several thousand acres down in Midland, Texas as well. So yeah, they can either go to landx.land, or they can certainly send me an email directly at jd@landx.land.
Awesome, JD. Thanks for coming on. Go make it a fantastic day. The opinions expressed on this podcast are solely those of the hosts and guests and do not constitute financial advice. Always consult a licensed professional for professional decisions. Thanks for listening to the Infinite Wealth Podcast. If you enjoyed today's episode, be sure to subscribe so you don't miss future conversations on building wealth and creating passive income.
You can learn more about infinite banking and get additional resources at infinitewealthconsultants.com. Until next time, keep investing with intention, and remember, your financial freedom is within reach.